All right, let's do a quick recap of today's price or yesterday's price action because it's 6:30 a.m. right now. I slept like 5.5 hours. I don't know. I had so much energy. I woke up before my alarm. So yeah, that's a good thing, I guess. Maybe not. We'll see how it ends during the day. But I got a lot to do today, so that's good. Oh, not a lot. I make it. If you say you have a lot to do, it will always feel like a lot. So I don't have much to do, but got some things to do. So yeah, all right. That being said, let me write something down real quick in my agenda. Um, there you go. All right. So starting yesterday, starting on a daily, my bad. What happened? Look at this. This was beautiful, and I was impatient. I knew price was going higher, to be fair. Actually, I didn't. I was expecting price to hold, but I was not. The way I traded London was not the way to for the highest probability. So we are in this or outside now of this yellow range. We are bullish on the yellow range. Took out these highs, tapped into the daily POI, and as you can see, immediate slowdown. Price not indicating any strong sells, just leaving wicks to both sides, but not like strong candle closures. And as you can see here, we have this bullish wick, then we have this bearish wick. Let's zoom in even further. Then we got this one that just stops above, which indicates, okay, now we're above previous weekly highs. We might turn down, but then not a strong closure. Then here we stay within this candle. So we got like a 3-pin pattern here, but then we just closed below this, but still inside this long wick from that first candle. So still not like strong hands taking over, if you want to call it like that. And this is our indication that we might go short. Why? Look at this. Took out all these wicks. So we took out that 3-pin pattern where everyone wanted to short. So that's a big ass trap. Taking that out, leaving a huge wick behind. Still like some bullish closure, a little bullish closure, but yeah, I don't know. Let's see. Let's see. Let's see if there's news today. Mm, I think there is. Thursday is always job claims. There you go. Job claims. Federal speech. Still have to read an article. Trying to get into the mental side and just generally get like if people talk about economic stuff, I can like speak with them. Not like idiot numb. All right, so that's on the daily. So on the daily time frame, we can look for shorts, right? Coming down lower in the 4 hour, what can we see? Yesterday, the impulse down actually, just closing below this over here. Not even this candle didn't close below. This one did just about. You can even see here inducing some buyers, then taking them out. And then yesterday morning, boom, impulse up, and followed by this candle like this. If you go lower, let's just go lower. You can see that's like a trap move. Early sellers, they got taken out. And then that's the wick on the 4 hour. As you can see, 4 hour wick after we come above, a strong bearish closure, taking out previous wick as well. And then we get the slowdown during Asia and end of London or end of New York. Um, over here. So here we started yesterday. Wait, what can we see as well? So now we have this bullish range. Let me make it. Actually, I don't need to lift it on. Same with this one. I need to lift that on. Let's keep it clean. We got a lot of lows to the downside here. We got this little trend line. So trend line stops below here, stops below here, stops below here. Bullish break. On a 30-minute, you can see the structures. Bullish break, strong impulse to the downside, and now we get like indecisive price action, low volume after this push down. Yeah. Bias liquidity. What else is there? More liquidity. Because liquidity to the upside is taken. I feel like we should go down. But that's what I've been saying over here as well. And I was right. Oh, sorry. The price was immediately like, nope, you're wrong. So let's see. We talked about the high time frame candles. We talked about the high time frame wicks. We talked about the liquidity that sits over here. Then we still have to reach discount on this range. So that being said, like maybe we can look for the same as last time. Over here. So here we got the bullish break. Let's zoom in, sorry. Here we got a bullish break to the upside from this low to this high, bullish break. And then, yes, we had a bullish break, but still we looked for shorts from this area. Why? Because we took these three highs. And therefore, we can look for shorts. Now we did the same. We took out those three highs. So, and impulse down. Same here. We had some internal range liquidity that led to the high. Same here. This is like your early sellers. It's a bit intricate compared to this one, but that's your early sellers. They're taken out. It's cold. No, over here, sorry. This is like your early sellers over here. They're taken out. And then bearish break, respecting this 1 hour order block. Same here. Early sellers, internal range liquidity, they're taken out. And then to the downside, now we get the slowdown over here after the break. So let's see how that goes. It's cold, damn. I have to turn on the heater. Heater. So coming in yesterday, took out Tuesday's daily low at the end of New York being formed at the end of New York. Asia took that out, therefore I was looking for longs, but I didn't listen to myself, of course. And what I did was like, okay, let's go to the 5-minute. Let me show you, because it's all about transparency. Actually, no, it's about me analyzing charts and getting better at analyzing charts. It's not for you guys. I'm sorry. That was a rude way to say it. Anyway, so we got Asia high over here, and if we go lower, we can see the price just came above Asia high. Wick through, filled the imbalance. Price filled the imbalance, and this was my early sellers, which was not really early sellers, but we had this low that led to this high. There was like, okay, that's taken out, that's early sellers. And I was trying to short here after that minor break. This low that led to this high, I entered there. Stupid, because there's not like the way I would like to trade. And we have a perfect example of the way I like to trade. So that turned into a loss. As you can see over here, we had liquidity building up. So, and we had the bearish break. So if anything, we shouldn't be looking for shorts until we reach discount of this range or the premium of this range. So then we reached the premium, and I was still an idiot, but a little less. Liquidity below the block, premium. Going down lower, we hit the most minor break in the world ever. Over here, if anything, it's not a strong break. See this low that led to this high break. Then I consider this as my early sellers, which is the weakest early sellers ever as well. So yeah, and that got taken out, and then I got pissed because that was just stupid. Because we just reached the premium, and there was no liquidity yet. Like, this is not really liquidity below the block. So yeah, here we go. Asia has been taken. Then coming up, just going above New York highs. Price respecting, I think there was this block somewhere. I'm not sure. Maybe everything was mitigated. Anyway, price going above New York high, breaks down lower, gives this minor break of structure over here, which was my early sellers. Why? Because I was looking to short from above these highs. Then coming down lower, we have this minor or internal bullish range. Got a high, low, or low, and then a bullish break. So you could class this as your bullish break. And then you have your 5-minute POI over here. You have some internal range liquidity. I didn't take this trade, I'm just breaking it down. Does that make sense? Internal range liquidity. Going lower, you can see it even better. Yeah, shit. What time is it? I have to meditate and do my stuff and then go on the charts. This could be your early buyers, but there's not really any early buyers. I'm not sure. For me, it doesn't look like there were any strong early buyers. Over here you got yeah, they're equal. Not strong early buyers, but you could class this maybe sure early buyers if you want to. And then you got the cleanest trade ever. Because you get your high, low, lower high, lower low, lower high, lower low, bullish break, liquidity building up below the block, above the block, sorry. And over here you can see the last or the extreme unmitigated wick candle-ish. And this is your long trade, 24, 27, and for 3.6, 4.1. That's clean as day. I missed that. Because I was at the gym. Yeah. I was back. I was not planning to trade. But then with the webinar with Callum, I was like, okay, let's step up the game. So yeah, that was clean trade. Actually, targeting these highs, 1 to 12, 12.5. Super clean, super nice. And then we have the short. This is the trade I took. By the way, I'm not doing a thing like where I'm showing my MT4, that stuff, bro. The fact that I'm showing my losses, you should be grateful. At least for me, it helped a lot when people share the losses because you don't want it, but like I always have this feeling like, bro, these good traders never take losses, and they do, but sometimes sometimes you just don't accept it. You're like, bro, they catch so many good trades, and they do. They catch so many good trades because they wait for the highest probability areas. So this is your early sellers then. Actually, I broke this down in a case study, but do it really quick. Early sellers, you get your 1 hour or 1 minute for the block above here. Come on. You get structure, we get a low, we get a high, higher low, higher low, early sellers, taking out this low, higher high, bearish break. There are two entries. You can watch the case study for that. One is here above, and one is after this break. Manual entry coming above this wick thing. I think my entry was at 710 or 7.8. I'm not sure. Anyway, it was a manual entry. Short stops above here and trail down. As you can see, close majority at 1 to 5, and then close the rest at 1 to 6.2 over here. Because I was impatient, because we came, as you can see over here, new accession, and I was like, okay, let's just take profits. I'm cool. So yeah, that's what happened yesterday. We took out the highs, we took out high time frame liquidity. We are building up more lower time frame liquidity by creating that move. So now we can see price maybe turn around. However, we follow the range, which I failed to do over here. Follow the range. So follow the range, and our range is currently bullish. So therefore we can look for longs until we break bearish. That's my recap. Enjoy it. I don't like making these. Well, I do like making these recaps, but I feel they're becoming less helpful over time. So it might change some things. But we'll see.